This is the first episode of me trying to help you guys understand what trading is, helping you get into it. Just basically a run through of what everything is, what everything I've learned, hoping I can help you understand quicker, because it's a long process to learn, you can't rush it. And today we're going to go through candles, what they are, price movement in candles, different time frames, everything really, everything to understand about them. Starting off, we've got two different type of candles. We've got a bearish candle, which is when overall price moves down, and we've got a bullish candle, which means overall price moves up. These are called the bodies of the candles, and these are called the wicks. And well, the top and bottom things are wicks. Yeah. Going into what wicks are, the top of the wick is just overall where price peaks in the candle. So this is the highest point of the candle, this would be the lowest point of the candle. Same with this and same with this. What makes these two candles different is where they open and close. So for a bearish candle, price opened here. It moved down overall, so it closed here. For a bullish candle, price opened here and it closed up here. We've got, let's go through some charts. Candles can also help you read stuff, so they can help you understand projections, price movement, everything really. So one thing I would like to talk about is different time frames of candlesticks. So right here, each candlestick represents 1 hour of price movement. So as you can see at 3 o'clock, where is it here? Price opened here. It peaked. Oh, that's a bit too big actually. It peaked right here. This is the top of the wick. This is where price peaked, and it came all the way. Well, it came all the way down here to this wick. Why is it not drawing? All the way down here to this wick, and it closed. Well, this is a really small wick, but it closed right here. And for a bullish candle, as you can see at 4 o'clock in the morning, it just overall looks more messy, but we can go on a higher time frame. I guess price movement looks a lot cleaner because higher time frames hold higher power. It can be easier to identify trends that are caused by the way candlesticks move on higher time frames. It shows overall higher price movement really. Okay, here we can talk about highs and lows that are created by candlesticks. Now the way I teach highs and lows is a 2 candlestick pattern. Let's draw this out. Say we have a bullish candle. This is the highest point, this is the lowest point, joined by a bearish candle. This is what I would call a high, because it's a move up and then a move down. Same with a low. We can just change these colours. Same with a low. I would call this a low, because it's a move down and then a move up. Let's just draw this out. So there's 2 types of trends in the market. There's an uptrend and a downtrend, which is created by, well, if it's an uptrend, it's created by higher highs and lower lows. So at the top of these highs, there would be I would only call it a high if we see an up candle and then a down candle. I would only call this a low if we see a down candle then an up candle. If we want to identify this on the actual chart, we can see recently we've been very bearish, markets going down, created by, as you can see, a move up and then a move down, then a move up, then a move down, move up, down, up. Overall, it's been creating lower lows and lower highs, which is what we call a downtrend. So downtrend kind of looks like this, creating lower lows, lower highs. We can also be in the consolidation, which is where we've not really been in any trends. Market's just moving up, down, just like this. Here it can be like harder to identify where price really wants to go. Kind of annoying to see sometimes, but I guess I can talk about how price can go from an uptrend to a downtrend and downtrend to an uptrend, right? So say, let's go with all these drawings. Say we're in an uptrend, higher highs, higher lows, higher highs, higher lows, higher highs. Now say market starts to reverse. How does it reverse? If we see this higher low right here gets taken out, and it has to be a full candle that closes below this higher low. It can't be a wick, otherwise we just don't count it. Right, it has to be a full candle to close below this higher low. This would give us kind of an idea that we're going to start going to a downtrend. Now if we want to identify when a downtrend is broke, creating lower highs, lower lows, lower highs, lower lows, we want to see the most recent lower high get taken out. So if a candle comes up, closes above this, right, this is where we can see an uptrend start to form. Now I can go through the actual chart, gold, which is what I've been trading for quite some time now. This is what I've become profitable on. Here, most recent, right? As we can see, we've been in an uptrend. Market's kind of going like this, up, down, up, down. Let me get rid of this. I didn't draw it very well. Okay, up, creating high lows, high highs. This, you see this, up candle, then a down candle, creating a low, right here. Candle, fully closed, below this most recent higher low, and what happened? Now we're starting to move between downtrend. This is really useful to identify, as we can join it with other kind of confluences to take trades off, which we'll talk about later on in the series. I don't want to go through that right now. We're starting at the very basics. Now if we can okay, here, right, as you can see, we're very bearish right now actually. Market's creating lower lows. It didn't create a lower high till here. Lower lows, lower high, lower lows, lower high. Right here, right. This was the most recent higher low. Now, if it wasn't the candle, if it was just the wick that was supposed to close above this to go into an uptrend, okay, never mind. This was the reason why it's the candle that closes above the most recent high or low, because the markets change into an uptrend or a downtrend, not just the wick. and here we see an example of that. If it was the wick that was supposed to close, the market would have, started going up from here. Didn't, kept on going down, creating, there wasn't a lower high until here. Again, the wick wasn't the body. We kept on going down further, right? Until here. This was the most recent highest point of these two candles. And boom, right? A candle finally closed above this higher low, and here, this is where we started showing bullish signs. Making higher lows, lower highs, higher lows, lower highs until here. Price broke structure, kept on going down, down, down. Price broke structure again, high. Market's just a bunch of trends, really. I guess I can go through one last thing. We're talking about rejections. Not really rejections, just about price action in general, to be honest. If we see a okay, say this is a bearish candle. So let's colour this in red, for example. Right, so this is a bearish candle. Overall price opened here. This was the lowest point, closed here, and this was the peak. From this candle, we can, let's draw the bullish one out real quick actually. Change that to right. Because of how big this wick is, and it's still closed red, from here we can kind of start to identify that, we've had a really big rejection from all the way down here, which means that we can kind of intel that buyers are starting to take over the market instead of sellers. Here the same thing, kind of the opposite. Price came all the way up here. It still closed bullish, came all the way down here, but sellers, pushed it all the way back over here. Kind of tell us that sellers are starting to take over the market. And there's one more candle that I would like you to know about, which is called a doji candle, which is where we've got a really, really small body, and we've got really long wicks. These kind of candles we don't really want to take notice of. Kind of shows messy price action that we don't really care about. Shows that price didn't really move anywhere. I can kind of show you some examples of a doji candle, if I can find some anyway. Doji. Okay, here. This is an example of a doji candle. We don't really wanna. This is really messy price action. Well, over the past 3 hours it was anyway. But we don't really want to take notice of this. Price literally moved what? Not even a pip in the whole hour. This is really, really messy. Okay. Also, another thing I don't want you guys doing is a bunch of this nonsense that will be like, oh, these candlestick patterns, this will tell the market that it's starting to go down, and a bunch of other random signals on Instagram or wherever you're seeing these signals that I don't want you guys knowing on. Literally do not correlate to the market at all. Stuff like heads and shoulders patterns, it doesn't tell you where market is going to go at all. Basically, head and shoulder is if you see a high, lower highs, then it comes back down here, creates a second shoulder, and this means price is going to go back down. No, it doesn't. It doesn't. Same with what a triple head I don't even know what this is, a triple top or something. This means price is going to go down. No, it doesn't. Oh, it's like a triple bottom. This means price is going to go back up. No, it doesn't. This stuff is literal nonsense, and people just want you to know and try and lose money. Basically, do not learn any of that stuff. What other patterns are there? Oh yeah, there's stuff like this as well. Where like, I'm gonna draw this out. If like, where's my drawing? If price is moving like, say there's like, price is failing to move past a certain point, and price is coming down. Wait, it's coming down, overall moving down in this line staying straight, right? Just patterns like this that just don't work at all, and this means as soon as price gets really small and it touches this line one more final time, it's just gonna bang. It doesn't. None of this is true. They're just trying to fool you, get some views, get some money. It doesn't work at all. There's a bunch of other signals that, and so-called candlestick patterns that may look appealing. They don't work. They genuinely do not work, and I don't want you guys knowing any of them, and just don't get confused with them, because it's dumb. Like, it's genuinely dumb. I don't really know what else to talk about in candles, to be honest. I kind of just want to leave it there, not really teach you too much on the first day. Kind of set a good basis of what candles are, price moving with candles, time frames, what candles show in each time frame, wicks, yeah. We'll be doing trade recaps as well on the channel, just to show you the trade that I took for the day, talk over it, how I could have improved, what I did well, see if I lost or made money that day. Yeah, that's about it.